The markets have taken a big beating during the month of May. What is your sense of the president's tolerance for more of the same?
Well, I think what's looking apparent is that Trump is going all out. And in terms of the financial market consequences of that, the assumption there could be that he's expecting the Fed to deal with that fallout. And of course, that could play into his credibility, if you like, because of course, for the last 6 months, Trump has been complaining about the fact that the Fed have overdone it, that they've tightened too much, that they should be easing policy and that rates should be lower. So if he continues to pursue his current strategy, equity markets fall further and we get a further tightening of financial market conditions, it becomes a lot more plausible that the Fed will actually act and that they will cut rates. And then, of course, it'll be more from Trump in terms of, I told you so, you got it wrong initially. And that, to me, is potentially the thinking in President Trump's mind at the moment, because the steps he's taken, if he follows through on those, there is going to be a much, much more notable impact on consumption in the United States, a hit to real incomes, and that's going to become very evident in the data in the second half of this year.
Are you seeing any of this in foreign exchange markets at all, Derek? Are there any dislocations? I'm looking, at the peso, for example. It's weaker, the yen is stronger, the dollar a little bit weaker. It all seems to be pretty much as it should be.
Yes and no. Again, it's very early days, but just looking at price action today, I know we had a move on Friday, but Aussie and Kiwi are a bit higher, a bit stronger. Euro dollar is through 112. So it's not a clear shift in favor of the US dollar like you would have assumed, and certainly previous lurches down the trade war avenue has certainly impacted non-dollar currencies to the benefit of the US dollar. And that's not as evident today as before. And that's, of course, because, as I said earlier, the markets are coming around to the idea that the Fed are going to have to step in and deal with the tightening of financial market conditions if this continues. And that kind of short-term yield play is becoming less and less favorable for the US dollar each and every day.